Hey guys, hope everybody's doing well. Jamie Troll here. Today we are doing a live from the Facebook page, Balance CFO. Make sure to like it, and from Financial Literacy for Women Business Owners Facebook group, and on my YouTube channel, Jamie Troll. If you've not gone over and subscribed, please do. It makes me happy and brings a smile to my face. So hope everybody's doing well today. We're going to talk about everybody's favorite subject, taxes. And by that, I mean, we're going to talk about the different stimulus funds and CARES Act funds you may have gotten and the tax impact of each of them. So I actually have, and I need to pull it up really quickly here while I wait for everybody to join. I'm going to go grab my, I'm going to grab the little spreadsheet I made for this and put it up, because I think this is one of those things that I think is a little bit easier to see and actually be able to kind of read exactly what I'm talking about when I say this stuff, because we're going to talk about a couple of different things. So we're going to talk about stimulus checks. We're going to talk about unemployment. We're going to talk about EIDL, both the advance and the grant, and we're going to talk about everyone's favorite PPP. So give me just 1 second to kind of get this up and running. This has been one of those kind of crazy mornings, and my computer has not wanted to listen to me. So hopefully everybody can still see me. Let me jump back into StreamYard. I've lost you guys. There you are. Okay, cool. So we got people on. Okay, so what we're going to talk about, we're going to kind of walk through each one of these separately, and then I'll take some questions toward the end of this. And tell me hi if you're here, if you can see me. I'm not. Am I timing out for you guys? Because I keep getting the spinny wheel. So I hope that this is working because my computer is running on overtime right now. Can you guys let me know if it's working? I got to check on my phone really quickly here and see if you guys can see me, because I'm not getting any comments. I may have to stop and restart. Okay, I see Tina. Let me know if you guys are here. Martha, can you hear me okay? Am I like... Okay, I'm good. All right. I look like I'm on a major delay, so it's really throwing me off a little bit. Okay, I see you guys. Oh, it's really hard to read your comments too, because my computer is just super slow right now. So if I miss comments, it times out sometimes. Yeah, something's going on here. Give me just 1 second. I got to shut a couple of programs down. Real quick, while I am hopefully fixing these computer issues, I want to give a major mega disclaimer on this, because yes, I'm a CPA, but this is tax advice. You cannot consider it tax advice. For real tax advice for your specific situation, y'all need to go to your own CPA or EA. It's still, hopefully it's not still timing out. Let me know. I don't know if these are delayed answers, or it looks a little bit better on my end, but let me know if you're still seeing it. I may have to, okay, I think I'm good. Joyce says I'm good. All right. So just make sure that you're working with a CPA this year. This is a year, if you've never done it, y'all have heard me say this a million times over. If you've never done it before, I need you guys to go find somebody. Now, importantly, I'm working on, I promise, I know I've said this, I'm working on expanding my preferred vendors list with more CPAs, EAs, tax preparers, tax planners who understand this stuff, because I don't do taxes, you guys. I've had many people ask me, I do not do taxes. But I'm expanding that group, because this group has grown so large that my small preferred vendors list needs to be expanded. So I'm taking some applications for people. If you are a CPA or an accountant that really has a good grasp of this stuff and you're looking for additional clients, please reach out to me at support@balancecfo.com. Because we are about to take new applications. I do vet everybody to make sure that they are qualified and can answer your questions, because that's really, really important to me. Importantly, I don't know if Bree's on here right now, but Bree is my CPA. She is not my CPA, but she is my friend who's a CPA. She's the person that I'm sending most of these PPP consults to. So she has opened up some new slots for PPP consultations, you guys. And these are hard to find. She gets it. If any of you guys got that PPP tracker, Bree was one of, it was myself, Bree, and another CPA, Kelly, that worked on that all together. So Bree is very well versed in this stuff, and she is starting to do PPP forgiveness consults. So if you are in that place where you just need like a 30-minute or an hour time slot to sit down and talk about that with somebody, Bree will have your back. I meant to post the link above. I did not, so I will post it when I'm done, or if Bree jumps on here, I'll have her post the link for her consults so that you guys can get on her calendar, because they are limited. But I trust her and she knows this stuff. So I know a lot of people want to talk to someone directly about their own situation. That's a great option. Okay, so that's my disclaimer. Second disclaimer, because I gotta have two. That's how many disclaimers I need today on this topic. Things are still changing. And not only are they still changing, there are just still some things that just still aren't 100% clear. So some of this will be my assumptions, and I'll try to qualify that, but know that that's the case. And you may go to somebody else and they may have a different perspective. And again, I am not your tax advisor. I'm just here to help you understand this stuff as best I can. So always make sure that you're consulting someone on your specific situation. But remember, it is changing. There may be additional guidance that comes out on a few of these things, and I'll point out those things that are still being discussed. Okay, sorry, had to kind of caveat all of that today because this is just one of those subject matters that I don't want anybody to come back and say, well, Jamie said. It is changing and everybody's situation is different. Yes, Sarah, Bree is fantastic. I agree. And Joyce says she's thinking of getting a new CPA. Yeah, and this is something, hopefully more CPAs will be getting up on this stuff, but I think that this has definitely shown the fact that there is you may have realized with some of your CPAs that maybe they don't have the client service that you hoped. So this is a good time. If you're going to switch, go find somebody but make sure you're asking them, because there are a ton of them that do not understand this stuff as well as they need to. So that's a really important qualification for this year, is that they have a really good handle on all of it. And some of them maybe who didn't earlier in the year, hopefully now, that the tax deadline is behind us and all of that they can kind of get up to speed quickly so that they can help their people, because it's really going to be important for this year end, especially if you're a business owner or self-employed. Okay, I'm going to jump into this spreadsheet that I made for you guys. And really quickly, hang on a second. Okay, now don't read ahead. I know everybody's going to. But I made just a little kind of graphical thing to help me walk through this. Okay, let me blow this up for you guys. I don't know if you can actually read this well, but and I can post this too in the group. I'll post this afterwards so that you can read it yourself. I just wanted to have something to actually walk through that kind of goes through this. So don't read ahead. We're just going to talk through each one of these individually. So here we go. We are jumping on in. So let's talk about the stimulus first. So the stimulus is the $1,200 that you got potentially, depending on your income level, that you got for $1,200 per adult, $500 per child. There were obviously some exclusions. Most people who were eligible probably got it by now. If you didn't, I'll talk about what happens. But what's up with that? Is the stimulus taxable? And there was especially so much confusion around this one. And I think it's because of the fact that the stimulus is it actually is a tax credit. All right. But it's a new tax credit, did not exist before. And instead of having to wait until you filed your 2020 taxes and have this tax credit then either reduce the amount you owe or give you a refund, right? They said, no, people need this cash now. So we're going to send it early. So we're going to give them this cash. And then this year end, there's no impact of it because you've already taken that tax credit. You don't have to give it back or anything like that. It's just you already got the cash for that tax credit. Great. But there's no other impact on your taxes. Now, if you're one of the people who didn't get it, but you should have, maybe, you should be able to get it on your 2020 tax return. Or if you maybe didn't qualify for 2018 or 2019, whatever year they used to determine if you qualify, let's say you were over those income limits. I think the income limits were $75,000 single, $150,000 married. It started phasing out after that point and phased out entirely by about $100,000 and $200,000 single and married filing jointly. If you fell into the bucket where your income was higher in the year that they used, and so therefore you didn't get the whole thing or you didn't get any of it, but in 2020 it was lower and you would have qualified, you will get that tax credit on your 2020 return. Okay. And again, another reason to use a qualified CPA that makes sure that you will get that money. But that is essentially how that will work. And so the other thing that I've put on here is how to record, because you guys are for the most part, business owners, self-employed people. So we want to think about how does this affect our books for our business? This one, it doesn't. This should not go into your business account. This should not show up on your P&L anywhere. This is personal money that was sent to you. So no taxes, yay, not business income, should not even hit your business at all. Shouldn't impact your QuickBooks file, anything like that. That's all just personal. So hopefully that makes sense. Let me know if anybody has questions on just the stimulus. That one's pretty straightforward, but it does get a little bit confusing with the fact that it's a tax credit. Some people were kind of saying, oh, well, it's money you're going to have to pay back. I think there's just a misunderstanding of what that meant. It's a brand new tax credit. You would not otherwise have gotten it. It was put into place with the CARES Act. You got the money early. Yay. So you're not going to get anything extra at year end if you already got your money, but you're not going to have to pay it back. Okay. So let's jump down to unemployment. I got a lot to cover, so I know I'm talking fast, but I just want to make sure I cover all of this. So unemployment, this is either regular unemployment or pandemic unemployment assistance. This is the second one. We're in the light blue. Okay. And this is talking about regular PUA and FPUC. That was your extra $600 of federal pandemic unemployment compensation. That was the extra $600 that you got through the end of July. And the amount you got federally, if you're getting anything from your state, the $300 or $400 for a couple lucky states of extra that you may be getting now or may be due to get once your state actually finally implements this, which a lot of states are still working on. So essentially all unemployment money you get. Is it taxable? Yes. Okay. Yes, this is taxable money. What does that mean? That means that you are going to have to pay income taxes on that money. It is considered income. All right. Now, importantly, you don't have to pay payroll taxes. Payroll are, if you're working, you pay payroll taxes. If you're unemployed, you don't pay payroll taxes, which is an interesting thing to me a little bit, that you actually pay more in taxes when you're earning the income. But you don't have to pay Social Security or Medicare on any of those funds. So that can be a really big thing. So for people who are typically employees, are used to being employees of their business, right? Or not of their business, of somebody else's business. You would normally, that means 7.65% you're not paying. And if you're a business owner, you're probably used to paying, at least on a lot of your earnings, 15.3%, both the employee and employer side of payroll taxes. You don't have to pay that, but you do have income taxes that you have to pay. And how much that is really going to depend on your own personal income tax bracket and any other income you have or your family has. That's going to contribute to that. A lot of states gave you the option to withhold taxes. I typically told people to do this because anytime we don't withhold taxes, we get a surprise later on, right? I'm much more a proponent of just take it out of your paycheck. And then, it won't be the exact amount. You may still have to pay a little bit at the end of the year, or you may get a refund, but at least it's better than having a huge chunk of money you have to pay at the end of the year because you didn't realize that taxes were going to come out of this. So the way this worked in a lot of states is that, they allowed for you to say, hey, I want to withhold taxes. Most states withhold it like 10%, 15%, up to maybe 20%, depending. But again, remember, because you don't have payroll taxes, it is lower than what you would normally withhold on a paycheck. Some states could not do that for the extra federal money that you got. So some states said, okay, you can withhold, but we're only going to withhold taxes on this portion, not the federal portion. That doesn't mean the federal portion is not taxable, you guys. So if you got the full $600, you need to set aside a portion of that money, right? Again, talk to a tax advisor, but at least probably 10 to 15% of that money so that you have money to cover the tax bill. And really, you should be paying estimated taxes too, but I'm not going to get into all of that. Ultimately, just at least make sure that you're putting it aside and you have that money to pay your tax bill next year, right? That's kind of the trouble that we get into sometimes with these things is we take the money, we spend the money, and then, part of that money actually has to go to taxes. And that's always the issue as a business owner or contractor anyway. So a lot of you guys are probably used to having to do that anyway. But that is something that I do recommend that you do. So just keep that in mind. As far as recording unemployment, again, similar to the stimulus, this has nothing to do with your business, you guys. I know it seems a little bit more related, but technically this is personal income to you. This should be going into your personal bank account. If you need to move the money, if you need it in your business, I say take it to your personal bank account, transfer it in as a capital contribution or something similar. Because the concern is if you put it into your business, you need to make sure it's not being coded as income to your business. Because if it is, you may end up accidentally getting double taxed, right? You may get double taxed on unemployment personally, and then you may get double taxed as it's part of kind of your business taxes that you're doing, right? Whether that's an actual business tax return or Schedule C or something like that. You don't want that muddying the waters of your P&L, okay? So make sure that that's not falling on your P&L. If you accidentally got that money into your business, make sure you're kind of categorizing that money as like a capital contribution, owner's equity, not income, okay? Oh no, is my live not playing on the Facebook group? Maybe that's why we're a little bit lower. Bree says she couldn't find the live on the Facebook group. Hopefully, it says I'm live there. Hopefully I am. Maybe I'm live in the wrong Facebook group. We'll go back and share this. So hopefully you guys, if anybody's watching from the Facebook group, let me know. Otherwise, I'm sorry for those of you who are watching this on replay. I'll go throw it in the group after this. If somebody wants to go, Bree or Sarah, if you want to go share this into the group. Yeah, so Helen, I'm live on Facebook. I've got a page and a group, so I want to make sure that I'm live in all of those places. And I may have I have far too many groups. Okay, she's in the Facebook. Okay, Tina's in the Facebook group. Okay, good. All right, so hopefully y'all can all see me. Okay, all right, great. Okay, now I'm coming on down to hopefully all that makes sense. So let me know. Okay, Bree found me. Good. Okay. You scared me, Bree. Jeez. Okay. So I'm going to come on down to EIDL. I'm going to kind of blow this up a little bit more and get rid of the ones we've already talked about. Oh, there we go. That's even bigger. So now we're on to EIDL. All right. Okay. Let's see. Okay. So EIDL grant or other grants. So here's how that works. So we're going to talk about EIDL grant first and then the loan because they are two different things. So the grant, this is the $1,000 per employee that you got from the grant or the advance that was automatically forgiven. You don't have to apply for forgiveness for that piece. That just is forgiven. It was given to you separately. It's not part of the loan. So for those of you that got that, will it be taxable? Probably. I will say, I hesitate to say full on yes, because there is a chance that the IRS or Congress or somebody comes out with guidance and says, no, it's not going to be taxable. That guidance does not exist at this point. Grants are typically taxable. Okay. So forgiven grants that you got or forgiven SBA loans that you got are typically taxable. My expectation is that the SBA EIDL advance will also be taxable. Okay. And that will be taxable as business income. Okay. So just like income you got from a customer or something like that, it will be taxable in that way. So in general, like I said, grants are going to be taxable, but keep your eyes peeled. It's not impossible that changes. That's why I need to kind of disclaimer all of this, but I would be setting aside a portion of your money similar to whatever portion of your earnings in your business that you are setting aside. Set aside that same percentage of your EIDL advance or grant. Okay. And how you should record that, I recommend creating a new, regardless of whether that's the EIDL grant or any other grant, create a new income account on your P&L that says, other grant income or something like that, or EIDL grant income. The reason I think it's best to be separate is because if those rules do change, you don't want to put it into like lump it with something else where you can't see it easily. And then your CPA misses the fact that you had this grant that actually wasn't taxable. So I do recommend showing it separately on your P&L. You can create a new account on your chart of accounts in QuickBooks or whatever you're using and record it there. Okay. So hopefully that makes sense for you guys. And that one, I would set aside some cash to kind of pay those bills back. Okay, so now EIDL loan. I get this question a lot. Is the EIDL loan taxable? No. Why not? Loans aren't taxable. So that means the money you're getting in from any loan that you got, EIDL or any other loan, is not going to be taxable because you have to pay it back, right? So how could that be taxable as business income to you when you have to pay that money back, right? So it's not taxable when it comes in, but that means it's also not a tax deduction when you pay it back. It's one of those kind of differences between your cash and what your P&L will show. You're not going to get a tax deduction when you repay your debt, okay? The only tax deduction, there's one exception to that, the tax deduction you will get as you pay it is for the interest portion only, okay? So only the interest you're paying, the extra amount. So you got in a certain amount, you're paying back that amount plus interest. That amount above and beyond what you took in to begin with, the interest portion, is deductible as interest expense on your business, on your Schedule C or whatever your type of entity is that you use, right? It is a business expense that you can deduct. Now, with EIDL, you can continue to deduct. There's no rules around what you can and can't deduct. Same thing with the advance, right? We'll get into PPP a little bit later, which is a little bit different, where if you get that money, anything you pay with that money isn't deductible. Not so with EIDL, okay? So EIDL, whether you pay for the thing with the grant or with the loan, that all those deductions are still deductible for you, okay? So how do we record the EIDL loan? That's going to be, or any other loan, right? That's going to be a liability on your balance sheet. So that money comes in, don't qualify, don't call it income. You don't want to be paying taxes on that as business income. It's a liability on your balance sheet. As you pay that down, the liability will decrease and you will get interest expense for the amount above and beyond the principal amount that you're paying. That will hit your P&L. So again, if you don't understand it, this is confusing. A bookkeeper will know how to do all of this. A CPA will know how to do all of this. Make sure to get some help because you want to make sure that this stuff is recorded correctly and that it's taxed or not taxed correctly, okay? Okay, and now 22 minutes in and we are to the fun one. So PPP. So PPP, that's our green box. We're just going to kind of scroll down so you can just look at that one. I hope you guys can actually read this. It's super tiny on my screen, but hopefully you can actually read it. PPP, is PPP taxable? You'll see my answer, no, but also kind of. It's complicated. So here's what happened. I'll kind of I think it helps to walk back, like what happened with PPP. PPP, when you look at the CARES Act, said it's not taxable income to your business. So we all celebrated and we said, yay, it's not taxable income. That's amazing. So it's not similar. It's better than if you got that money from clients, right? Clients, that's going to be taxable income. This is money that you're just getting from the government and yay, there's no taxes. So that was, we kind of celebrated for a little while, but I think those of us who are kind of in the know and in kind of this world, the CPA world, were like, how's this going to go? So we were kind of waiting to see like, all right, like what's going to come of this? And then a couple months later, the IRS back in, I guess it was the early summer, came out and said, okay, fine, Congress, PPP isn't taxable. I don't know that they loved that. But here's what's going to happen. Anything you use PPP for, now there are some weird exceptions that I'll get into for those of you who are sole proprietors at LLCs, but in general, anything that you use PPP for is not going to be deductible. What that doesn't mean though, I think some people have taken that like really intensely, meaning like, okay, I paid 2 months of rent with my PPP. Does that mean I can't deduct my rent for the entire year? No, it's just the amount that's paid with forgiven PPP money. If you take this money as a loan, no issue, although I don't know that that's the best decision from an overall perspective. I think getting free money is a little bit better than saving a little bit on taxes. But that's where some people kind of took that, and that's not what it is. It's just amount. You can't, the amount of deductions essentially that you get will be reduced by the amount of PPP loan you had forgiven for the most part. I'll get here in a minute to my sole proprietors and my LLCs. But for the most part, if you paid rent with your PPP money, that rent won't be deductible. That specific rent won't be deductible. If you paid your employees' payroll with that money, that payroll won't be deductible. Okay. So it almost backs into sort of the same thing, right? Like it sort of backs you back into the same place where, okay, I got the money tax that was, not taxable, but now I can't deduct things. So it's kind of net, you end up for the most part in the same place. I think some CPAs are like, man, it would have been better had they just made it taxable income, because now it's just harder to track. Right? Now you got to track all those expenses, make sure you're excluding those expenses versus just, being able to say, okay, fine, it's taxable income, add it into income and we're done. So it just added a lot more administration and honestly, a lot more places for things to go wrong, because to be honest, so many people are not going to understand this, not realize this, and potentially have repercussions from it. Again, though, importantly, this could change. Right? So the IRS said, hey, you can't deduct these expenses. And then the AICPA came back and said, we don't like that ruling. We think this whole thing should be non-taxable, include it, and you still get to take the deductions. Okay. And a lot of members of Congress said, hey, the intention of this was to not have this be taxable, right? Like the intention of this was not to make this harder on people and now have to track all the things that they use PPP for. And then you get into the crazy mind-bending thing that a lot of us are thinking about is like timing wise of when you apply for forgiveness versus when you file your taxes. That's going to get hairy as well. If you're not forgiven when you're filing your taxes, you have to go back and amend. So many questions. So suffice this to say, there's a lot of things still open. This is still a moving conversation. What would I do if I were in your shoes? I would prepare to not be able to deduct those expenses, meaning I would set aside a portion of that money, not necessarily the PPP money, because you have to spend it all. You have to spend it, but know what the tax consequences are going to be. And work with the CPA to do some tax planning around, okay, if I can't deduct this payroll, if I can't deduct all of this, what does that mean for any additional tax liability that I would have? Now, again, people are like, well, that's silly. I shouldn't have gotten PPP. Well, yeah. I mean, if you got $50,000 of PPP and then end up, let's say, having to pay $10,000 of taxes on that forgiven money, essentially, right? Or you lose those deductions and it ends up in $10,000. You still got $40,000. So it's still better to get PPP and get PPP forgiven. But it is something you have to keep in mind when you're doing that planning so you don't have a big surprise bill. So even though this is still a moving conversation, I would say if it were me, again, not tax advice, but if it were me, I would be putting aside some extra money. I would be working on tax planning with somebody starting pretty soon here, honestly, to make sure that I was prepared for what my tax bill was going to be next year. Because PPP is going to be the one that throws people for a loop. Okay. So hopefully, I don't know if that makes a ton of sense. I know it's a little bit crazy. It's still moving. Some of these stimulus bills do kind of reverse the IRS ruling and say, no, you can deduct it all. But nothing has passed. And we don't know if anything like that will make it into the final bill. So I would not expect that it would. I would err on the side of caution on this one and make sure that you're kind of reserving some. And the amount that you reserve is really going to be dependent. I can't give you a percentage, you guys, because I don't know your tax situation. Work with somebody to make sure that you know that. Okay. Hey, Bree, can you drop your PPP consult link? I talked about it towards the beginning, and I forgot to put it in the kind of, almost said show notes, but in the description to this, I forgot to put it there. So if you can drop that, throw that in, and then everybody can see it. And I'll also share it around too, because Bree is doing some limited consults, 30 minutes or an hour, I think you can book, depending, that are kind of these strategy sessions around PPP to help you. I think she also has a more fulsome PPP package for people who want to come on and be new clients. But post that. I'll put it up so that people know who you are, and then just tell Bree that you saw her over here. The last thing I want to talk about with PPP though is the fact that how to record it. So until PPP is forgiven, this again, similar to any other loan, should be sitting as a liability on your balance sheet. Okay, it should be sitting there, hanging out as a liability on your balance sheet. So when it gets forgiven, that is when you would kind of move that over, and it would become kind of an other non-taxable income line. And again, I would just make a new one, other non-taxable income dash PPP here we go. I'm going to put Bree's link up while I'm talking. This is a long link. So for those of you who are on YouTube or watching this somewhere else, I will grab this and put it somewhere else so you don't have to like type this out. Okay, I'll watch for a post from me after this. But for PPP though, make sure it's a liability until it's forgiven. Then it becomes kind of this other non-taxable income. But you should be tracking all of those things. I mean, you need to track the things you're using PPP for anyway in order to be able to apply for forgiveness. So make sure that you're tracking all of that out. I did promise my sole proprietors and LLCs. The one exception here, if you're not a non-corp, if you don't pay yourself on payroll, if all you do is take draws and you're an LLC or a sole prop, I recommend that you use the full amount of PPP if you can. If you got the right amount of a loan, i.e. 2.5 times payroll, and you're self-employed, independent contractor, or anything like that, I would pick the 24 weeks because you can pick 8 weeks, 24 weeks. Pick the 24 weeks, pay yourself the full amount of your loan, assuming again that it's 2.5 times your average monthly payroll based on your Schedule C line 31. Okay. So Schedule C, line 31, divided by 12 times 2.5. That's what you can get forgiven for. That's what you can pay yourself as a sole proprietor if you pick the 24 weeks. I'm talking very quickly. Sorry. But I recommend doing that. Why, you ask? Why do that rather than take a part of it to pay yourself and a part of it to pay rent? Because rent is a deductible expense for you on your Schedule C. Therefore, if you use PPP to pay it, you don't get to deduct that piece of rent. However, as a sole proprietor or LLC, your payments to yourself are not deductions on your Schedule C, right? You pay taxes on whatever's left. So anything you pay yourself out of your business, not a deduction on your Schedule C. Therefore, it doesn't impact your taxes if you pay yourself with that amount. Does that make sense? I have a whole video on this for sole proprietors. Go to my YouTube channel. Make sure you're subscribed, of course, but go to my YouTube channel. I have a whole playlist on PPP. And there is one that says PPP full forgiveness for self-employed, where I talk a little bit more about that concept of why I think it's better from a tax perspective to do that. Again, though, not tax advice. I'm not your personal tax advisor. Go talk to your personal tax advisor about your specific situation. Also, a lot of sole proprietors and LLCs accidentally got too much money. Maybe they based it on your 1099s instead of your net amount. And so you want to talk to a tax advisor about the best thing to do in that case. So how many times do I have to say go talk to a tax advisor? But I really mean it for this, you guys. I think it's really important that you are talking about your specific situation. But I also think it's important that you have some general knowledge so that you can sense check, because that is something that I've seen, people getting advice from their CPAs that they're like, that doesn't really jive with what I'm seeing. So I do think it's important that you have some base knowledge of this before you go chat and just rely on a CPA, because this is so new. So not everybody, it's hard to vet those people. And this will allow you to give that base knowledge that says, well, wait a second, I heard X, Y, and Z, but they're telling me, A, B, and C. I don't know what's going on here. So I really like for you guys to be here and to be involved and to be learning this stuff on your own so that you can sense check when you do go talk to that tax advisor. Okay, so it looks like, so we've got it shared. The PPP consult link is on YouTube as well. For those of you guys who are watching on YouTube, everybody can go click on that and schedule a time with Bree to chat, because they'll probably go fairly fast. But especially now, we've been waiting on this PPP forgiveness, blanket forgiveness potentially for loans under $150,000 for a while. Who knows when and if anything is going to pass on this next stimulus, right? Who knows? And we, again, even if that is passed, it doesn't mean it's a get out of jail free card. You still have to use the money and actually certify that you use the money or tried to use the money in the way you were intended to. You still can't go like buy whatever you want with it. You have to use it correctly. So stay tuned. We're continuing to update on all of this. Anybody have questions? I've got a couple of minutes if anybody wants to ask any questions at all on this stuff. I know this was a lot of information, but I think that this is the topic we get a ton of questions on around what's taxable, what's not taxable. And I get it because there's so many different, kind of stimulus funds coming. And I'm worried that, there will be a subset of people that are just not prepared for any additional taxes that they need to pay on any of this money. So just make sure that you are paying attention. I'm glad you're here. I'm glad you're interested in learning about it. I'll continue to put more stuff out on all of this. So if you don't have it yet, make sure to download the PPP tracker. That'll fill out your whole forgiveness application for you and help you with those complicated things like the FTE calculation and all of that. It'll help you figure out whether you can do the safe harbor, whether you qualify for safe harbor or not. It will help you figure out whether you use the easy form or the regular one. Go to, actually, I'm starting to give out my new link. So my new website is live. We're working on a couple of things right now, but it's actually jamietrull.com/EIDL tracker. You guys are probably used to my balancecfo.com PPP tracker, PPP tracker. So jamietrull.com/PPP tracker. Or if you don't have the EIDL one yet, I have a similar one for that where you can track everything. You can calculate your interest. It's jamietrull.com/EIDL tracker. So that's pretty much it. Let me look really quickly. So I don't have a CPA and just started out using Wave. Any thoughts on their CPA service? Okay, so I haven't heard much about Wave specifically, but I don't recommend, so those like more impersonal services, they don't get to know your business or your business model, or all they're doing is processing. So that's the case typically for like things like Bench or QuickBooks bookkeepers, or Wave, and that's a CPA service. I definitely would not do a CPA service from someone like that. I wouldn't use H&R Block. You need as a business owner specifically, even if you're an independent contractor, whatever it is, there's so many different avenues you can go down. You need someone who understands your business and to work with and that you can talk to about your specific business. You need a personal relationship. That doesn't have to be in your state. A lot of people think that their CPA has to be in their state. They don't. They can be anywhere. I have a preferred vendors list. It has CPAs and bookkeepers. They work with people pretty much anywhere. And you can check with them whether they work with people in your state. But I typically don't like those depersonalized services. There's a lot of them. They're cost effective, but I've known a lot of people that have had to, specifically with the bookkeeping, get a lot of things cleaned up on the back end that were not done correctly because they never really, it's different people oftentimes too. It's not always the same person who's doing it. And a lot of it's automated. And I'm just personally, I'm not a fan. It's just not my style. But that's just me. Okay. Let's see. Is it okay to apply for forgiveness if the 24 weeks are not finished yet? Yes, you can if your bank is accepting them. I have a Gusto article with some considerations around if you want to do that. Again, we're still waiting on potential blanket forgiveness, which would limit the paperwork you have to do. You have 10 months to apply. So in most cases, it can make sense to just kind of hang out and wait and see if things get easier. There are some specific situations, specifically if you're an employer and you need to lay people off or something like that, that it may make more sense to apply sooner rather than later. So go check out that Gusto article. I have it posted somewhere, or you can just search for Gusto Talk Shop is their blog. I write blogs for them and you can find mine. Okay. Hang on a second. Thanks, Bree. And thank you, Sarah, who did most of it. Okay, let's see. I talked about the blanket forgiveness, Holly. It's still a possibility. I just want to make sure I'm not missing anything. Let's see. Sorry, I'm late. If I'm in Texas, which does not have income tax, do I pay it? Yes. So Texas doesn't have state income tax, but you still have to pay federal income tax, just like you would anything else. So it's just like any other wages. You don't have payroll taxes, but you do have to pay income tax like you would on anything else that you earned, not to Texas, but to the federal government. Okay, let's see. Has an ITI and lives in Mexico. We didn't receive it. Yeah, there are still people who haven't received it. There are some exclusions for people who weren't able to get stimulus money. I think if the second stimulus passes, they're looking to fix some of the things potentially. Like I know a lot of college students weren't eligible because they were still dependents, but over the age limit. Or even adult dependents. So they were looking to potentially change that, but it just depends on what ends up coming through and if we even have a second stimulus. I'm not sure which credit we're talking about. Oh, it must be the same. That may be the same person. Will be. It depends on your personal situation and if you're one of the exclusions for being able to get this. If she lives in Mexico, I would think not. I think you have to be a resident here to be able to get the stimulus. Okay. I already got yours, Martha. Let's see. What about the EIDL grant that gets deducted from our PPP forgiveness? That becomes a PPP loan at 1%. So that would not be taxable again, right? Yeah. So if the EIDL grant gets subtracted, it's a loan. It's not going to be taxable in that instance because you're going to have to pay it back. So that's a good point. Whoever that was, I can't see it, but yes. Yes. Let's see. Yep. Okay. So I think I got to most of those questions, you guys. I'm going to let you go because it's been 40 minutes and y'all don't want to hear about taxes anymore. And I don't want to talk about them anymore. So I will talk to you guys. I'll be back stimulus Q&A on Friday, assuming we don't have any weird tornado warnings again that make me cancel it because I'm in the closet. So I will see you guys back here on Friday for any and all of your stimulus questions and an update if I ever get to have one, because it seems like things are just kind of hanging at this like stalemate right now, which is unfortunate. But, I guess our Congress likes to sort of leave things to the very, very last second. And at this point, I think the end of September is really that time frame because that's when all the budgeting decisions and everything have to be made by the end of September for next year. So Congress has pretty much just like kicked the can on all of this, I think, till then. But you never know. So yes, and Holly, I'll post the slide out in the Facebook group if you're not in it. So Holly, you're watching me on YouTube. Come join Financial Literacy for Women Business Owners on Facebook. It should be linked somewhere. Or just go to Facebook and search Financial Literacy for Women Business Owners group. Join it. I'm going to post the this little kind of slide template that I made up there so that you guys can read it, and I'll post Bree's links as well. All right, guys, y'all are awesome. My throat hurts and I need some coffee. So I will talk to you soon. Bye, guys.